There's a more favorable phase. In our bull versus bear segment, we break down for Infosys what's working and what's not. Jasmeet, can we say that the good times are here for IT stocks, or is this just a mere up move?
Well, that's still a wait and watch for complete IT pack. While today in bull and bear we have Infosys. Starting off with the first bull case, we see that Motilal Oswal has upgraded the stock to buy from neutral, showing a positive momentum and up move in the stock. But on the other hand, you look at the bear case, the growth remains around 5.5% in FY26. It's the expected range. They still remain low single digit, while that's something to watch out for. If you look at the other bull case, we see that the rupee weakness is something that's supporting the margin. And as the rupee fell today, that has led to the overall IT pack boost in trade. But on the other hand, the fundamentals remain the same. The business is still the same. It's just the rupee which is weakening that's helped supporting the company grow. And even the Q2, we had seen that the Q2, most of the IT pack was beaten estimates, but that was again on the back of rupee depreciation. If we look at the third bull case, we see that Infosys is the key beneficiary when it comes to AI spending, as the company is seeing up move in terms of AI spending as well as the AI structural movement. But on the other hand, the discretionary spending for tech budget still remains tight in a lot of other pockets. While though the Fed rates have been cutting, we saw in the previous month, but still the discretionary spending from the US is still weak. If we look at the other bull case, we see that the IT valuations are attractive at this point of time, given they are low at a 5-year average. But on the other hand, we look at the bear case, the sector is a matured sector. The structural up move in the growth is slower for this particular company, given that there's a lot of competition and a very tight margin space. If you look at the other bull case, we see that IT is currently in 10-year low decay when it comes to the IT weight in the overall Nifty, which boosts the risk-reward ratio. On the other hand, the bear case would be the low weight signals basically underperformance and pressure on the stock movement, as the overall IT pack is down 18 to 19% Y20 basis. If you look at the last bull case, we see that the company has 37 buys with the top target price of 2,150, which is an upside of 38% from here on. On the other hand, we said that the lowest target price is set at 1470. You see the huge variance coming in, and that is on the back of weak sectorial movement and weak trend in the IT, which we have been seeing from past few quarters.
Siddharth, coming to you, obviously Motilal came out with this note today in the morning on the IT sector. Multiple positives is something that they have highlighted. But as per you, what has changed today? I understand that rupee is depreciating, valuations are low, but these were the case, I believe, at least 15-20 days back or 1 month back as well.
Definitely, I think, Sumit, what looks like is that, yes, we are a little bit ahead in upgrading the sector, but we believe that while Q3 could still see those furloughs-related slowdowns, but I think market will now start looking ahead in terms of the outlook. That is clearly what we believe that the near-term demand softness is already in the price. And beyond Q3, what we look at is over the next 3 to 9 months, which is essentially the H2 of CY26. We believe that the AI projects scales beyond the pilots, deal activity improves, bulk of the infrastructure setup, I think that has already been done. Now the transition, we are expecting the transition from hardware heavy investments to robust services demands, where the Indian IT players are positioned pretty well, especially if you look at something like an Infosys, where the Topaz is perfectly best suited. We have the other ADMs which are there for Infosys, clearly aligning to benefit out of this services demand from the AI-led investments that has already done. So again, what we believe is that Infosys, with its Topaz suites of AI services, full stack app service capability, would be a key beneficiary of the enterprise-wide AI spends. And at current valuations, we believe that the upside risk clearly outweigh, and hence we have upgraded the sector as well as Infosys to a buy from a neutral rating. We have a target price of 2,150, giving almost 38-40% upside from current levels on Infosys.
Okay, so that's the target price coming in on Infosys as well. But moving